What is going up, traders? I hope you guys are having a fantastic day today. So, in today's episode, we're going to be talking about the top 5 stocks for retirement, and these stocks are going to be stocks that I see potential in within the over the next 5, 15, 30 years. Just stocks that have very good growth potential over the course of a couple of years. All right, so the first one that I want to kind of show you guys, and you guys may have different opinions, and you guys are more than welcome to leave them in the comments. I would love to hear your feedback from these stocks here. So the first one here is NOW. Now you might be thinking, well, Carter, these spreads on this are pretty gnarly. Well, look at this consistent uptrend. This is what I'm looking for. Pretty much if you'd have bought this stock 1 year ago, and you would have held it all the way through the year, that would have been just shy of a 39% gain. And if you guys want to know where to look, it'll be right in this corner right here. So when I click on this and then go all the way out here, 39%, almost 40 in some cases. So, this stock is a very, very good stock that has a consistent uptrend. It has a nice bounce over on the 200 moving average. It's just a very, very good stock to look at. And, you might be thinking it might be too expensive. Well, yeah, but if you have $1,000, why not buy a couple of shares of this and see what happens over the course of a couple months, couple of years, just to get your ball rolling with investments. This stock will be a pretty good one for your portfolio here. All right, the next one here. Now, this next one is a very, very common stock that multiple traders have. I own this stock, and I would recommend this one to almost anybody here. Now, we have Apple. Apple's the first trillion-dollar company, and do you honestly think they're going anywhere? I think this company's just going to keep thriving. They're going to continue with great marketing, continue with great products. If you think about it, they made their products, or they kind of send off a kind of hipster vibe. If you go to their stores, they have all wooden desks, and they have just where you can just hold it, experience it, play with it. It's kind of more of a hipster vibe, and that's what they go for. They like to be that cool company rather than Samsung likes to be that tech company, that tech, and always is coming out with new things, not afraid to try new things. Apple's not going to put something in their phones that they feel is confusing or is going to disappoint their customers. So with that being said, this stock over the course, if you'd have bought this exactly 1 year ago, you would have had around a 32% profit win. And that's over the course of, buying at just 1 year ago. If you would have bought at the lows here, this would have been around 52% profit. So, you could definitely make a lot of money on this stock. And if you think it's overextended, like I said before, this stock's not going to go anywhere. It does drop. That's normal for stocks to drop. Okay? You're not going to just make, put in $1,000 so you buy 4 shares of this company, and then tomorrow you wake up and you have $1 million. That's not going to be the case. It might take a few months, if not a year, but this stock's almost guaranteed a profit. Let's look at a longer timeline. This is the 180-day mark. Let's look at let's go back to daily. Let's go 5 years. Let's change this to week. Let's load this bad boy up. All right, now this is a lot clearer. This stock was trading at $68. Now this stock, if you'd have bought this 5 years ago, this is over a 225% return, rather than the S&P, which averages 6. So 6 times 5 is 30. So rather than just a 30%, if you'd have put it in the market, this one beat the market, 5 or 6 times with ease. So, that's what you look for. Because if people back then thought, oh my goodness, this stock's at, 130, this is overextended. Now they look at it and they say, oh my God, this stock's overextended. Look at it. Same idea. I bought shares at 156 down in this range on this little pullback here. And, it's obviously been doing very well for me. I'm continue to holding positions. I don't plan on selling it. I want to see this stock rip to $400, $500. That's just my mindset. I always look a year or 2 years in advance. I'd never look at these long-term stocks as, oh, I'm going to sell them tomorrow. That's where a lot of people lose money in the market, is they sell them just because they have a bad day. And, when I bought this stock, where did I buy it? Up here. It did pipe all the way back down here, and I was actually in the red for a day or two, if not a week. I was in the red, and I thought, okay, should I sell it? Should I take my losses? But that would not have been a smart, strategy for long-term play. I'm looking for the stock for a couple of years, like I said. So that's where a lot of traders and a lot of investors kind of mess up, is they get scared when things go bad rather than just holding it or even buying. Imagine if I would have bought more shares on this pullback here, I would have been up double what my investment would have been. So that's how I look at it. All right, so this next one here, NIO. This one is a car company out of, I believe, Japan. They released their IPO about a week ago, and now this one is a riskier stock. I'm not gonna lie, but the upward potential on this is enormous. All right, so this stock went from $5.35 all the way up to $14. That is, not a normal percent to do in this short amount of time. But the reason why it did that, this company released some news. They released their IPO. They had a ton of volume, ton of people looking at it, had news, had a ton of cool things. They released a car to compete with Tesla. It's a very cool, very, 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 very cool car here. I'm talking like Lamborghini looking type cars, and they're all electric, 0 to 60 in almost like 2 seconds. 1,000, 1,000. You're at 60 miles an hour. So this car company is something that I have purchased. I have, I don't think I have I believe I have like 250 shares, and I did buy it at the open of their IPO, the first day you could buy it, just because there's a lot of news for it. So like I said, I bought it, and yes, it hit $15, but it also pulled back. And I could have made almost triple my investment here, but I probably should have sold. But I honestly thought that this stock had very long-term potential play on it. I didn't want to get greedy, because imagine when this stock goes to $30. People are going to be like, oh, I wish I would have bought it at 15, Oh, I wish I would have bought it at 30 when it goes to 100. That's how I look at it. These long-term stocks, they should be pictured as that. They shouldn't be looking at it like, oh, I'm going to sell this tomorrow type deal. So this, let's see where this company is at in the next couple of years. That's how I'm looking at it. If I lose, $200, $300 on this, it's not the end of the world, because I have my other investments like Apple, which is making me, very good money. And then I have, a couple shares in other different types of companies. So this is, this will be a stock that's a little riskier, but I have those long-term stocks that can kind of balance it out, and it won't be too bad. All right, so the next one here. What is the next one? Amazon. Alrighty, we all know Amazon, right, guys? Yeah, we all do. I don't know what's going on with my computer here. Alrighty, Amazon. So you might be looking at this chart being like, dude, that is not a good long-term chart, but relax. We're only on the 20 days. Let's go to 1 year. Look at that. This would have been Double your investment for sure, because 950 and then hit a high of 2,000 or $2,050. So yeah, it's almost doubling your money there. So just from everybody knows Amazon, they do have pullbacks. That's normal for stocks. Bounces off this. I believe this is the 90-day moving average line. And as for you new investors, you guys don't have to be all technical with these moving average lines. I would just highly recommend having the volume, just to see where the stock's trading per day. Don't check it every day, because it'll drive yourself crazy. Check it once a month, especially for companies like Amazon. They're not going anywhere. So, so I do own one share of Amazon. I did buy it a little overextended here at around $1,800 in that price range. And then it fell down to 17, and I was out like $100 and kind of freaking out. But it did pull back, which is normal. So this stock is, we all know Amazon. I don't have to tell you their perks. Largest retail online company in the world, or one of. I don't know if they're bigger than Alibaba, but they're, in my eyes, a very good company. They're going to be around for a while. So bought a share. It's doing well for me already. So I believe we have one other one. All right, this one is CVNA. CVNA here. Now this is, I looked it up here because, I saw that chart and I was curious. So this is just a company that is a online kind of car dealership type deal. It's yeah. So if you're buying a car, you can go on their website here, and buy a car. Pretty easy stuff. But look at this stock. Went from 12 all the way up to $72. Now that is a move of 600 and something percent here. How long is this? 1 year. That is crazy. Obviously this stock's been moving in this kind of pullback area. That's normal. It honestly might go to $50. So if it does, I'm gonna hop in there and kind of do this as maybe a long-term swing trade. Over a month. See where it puts me at. Set a little alert here. But the reason why I wanted to look at the stock is just because it went from 12 to 72. Normally, when a stock's move like this, even when it gets to $50, it has a pullback, and it didn't really do that. So this means that a lot of people wanted to invest in their company and didn't want to sell their shares. But as it got up to $70, this is kind of expected. I think it might pull back to that $50 mark and then continue up. So that's where I see it. I'm not worried about this. I think this is a very good company. I was reading up on it, trying to do a little research, because you never want to put your money into something you don't know anything about. So so I feel like this company is strong, it's reliable, and it is a stock that I see a lot of potential in, with maybe in the next 5 or 3 years here. So those are the stocks. I believe that's it. So how many is that? 1, 2, 3, 4, 5. So these are pretty much the top 5 stocks that I would recommend for anybody who's looking for kind of a long-term investment type deal. You don't have to actively trade these stocks. That's where a lot of people, get me upset, is because they say, Carter, I want to invest, but I don't have the time. Well, you don't need time. You just need a little startup money. Put your money out there. Let it work for you. Some of these you'll get some dividend checks from, and a little side income, and then maybe you build it up, and then you put some more money in it. Pretty soon you put $1,000 in, and you hold this for a year. Imagine if you would have put $1,000 into CVNA, and now it would have been what, $6,000 over the course of a year, and you didn't even have to do anything from it. Literally, it gets me so upset, when I see these. And you might be saying, okay, well, really, I did not know that the stock was going to go to $70, Carter, at $12. I think if we all knew, we would have bought some. All right, well, what were you guys doing when it was at 30? Oh, it's too expensive. All right, so that's where people get me upset, you know. But all right, that's it though. I hope you guys enjoyed this video. If you did, please sure to like it. Give me a nice thumbs up there. Shoot me a comment. Ask me if you wanted me to look at any stocks. I would love to do it. I love doing this. So that's it though. Remember to always stay happy, stay positive, and I hope you guys have a fantastic rest of the week and take care.